Good evening, all. It's Sunday night. Hope you had a great weekend. Hope you're able to relax. Hope you're able to celebrate the holiday. We are coming back. Last week was very choppy, very dangerous. The week before a holiday is always dangerous, and we have to watch out for that. It was a 4-day week as well, which means that a lot of people took off. Now, a lot of people are not back yet. You know, they're taking probably Monday off and maybe a couple more days off. So be prepared for low volume picking up right now. Now, what I want to show you is how volume went up into the 666 area and into the bounce. Then it came down, a little bit of a spike, and then it's been dropping off ever since. I mean, you know, fairly normal volume, and you can see that the volume is basically right there. But you can see it's definitely the last week definitely dropped off and very low volume, which makes trading very choppy. It makes for lots of tails on the candles. I'm gonna take this off. Okay, now I'm gonna fly through this quite quickly. This is S&P 500, and you can see one shoulder, one head, and one shoulder. Head and shoulder pattern. There's the neckline right at the 882. If we break that, we are in trouble. The S&P 500 is the main index that I personally watch. You can see the moving averages, the 21, which is the yellow, we're below. The red, which is the 200-day, which we're below. And the blue, which is the 50-day, and we are below. We are below all three moving averages. Last time, we broke below, we went into a tremendous downtrend. So we really have to be careful here, because this could spell trouble. We could have a double dip. We could come back down to the 666 level, which is all the way down here. Now, this is just S&P 500. I'm going to show you a lot more. Here's S&P 500. Here's the Dow. You can see basically the same pattern. Same support resistance numbers that I gave you last week. Nothing really changed. We did not break either way on all indexes. Everything across the board did not break, but you can see these same kind of patterns, same kind of head and shoulders pattern on Dow Jones. This is the NDX, the NASDAQ 100, mainly tech stocks, and you can also see a double top, and that's never a good sign, but it is a little bit stronger than the main indexes. This is interesting. This is gold. Now, you know, you would think people are escaping to gold, but no, gold is still weak. It's still sitting right on top of support. If we break the support, gold is going to pull back as well. That usually just means that there's a lack of activity, there's a lack of growth, there's a lack of money out there, basically. Silver also coming down, actually breaking support. USO, this is the United States Oil Fund, and you can see the definite double top over here. Did not penetrate, sitting right on top of support. If it breaks this, it's going to come back down. So I think oil is probably on its way back down, which is very curious, because the dollar itself is also on its way down, and that basically means that there's lack of demand, there's a lack of growth, there's lack of activity out there. This is the financial spider, and you can see that it's also sitting right on top of support, lower tops, also very scary. This is the home builder, S&P 500 home builders, and this is the S&P energy, also sitting right on top of support. This is the S&P retail, sitting right on top of support. This is select industrials, materials, technology, utilities, consumer staples, healthcare, metals, oil and gas, market vectors. Which one was that? Oh, that was the semiconductors. I'm sorry. And here's something that's very important. This is the dollar index itself, and you can see how the dollar index itself is quite is sitting around top of support. It looks pretty scary. This is the Australian dollar coming down. This is the British pound coming down. This is the Canadian dollar coming down. This is the euro coming, bouncing back down a little bit. This is the Swiss franc bouncing down a little bit. This one is the only one that, to me, looks great on the long side, and that's Japanese yen. For some reason, there's a major shift in economic powers right now, as far as I'm concerned. Russia also looks very weak, and these are the emerging markets that also looks very weak. Let me look at some bonds. This is Shy. This is the Lehman It's still called Lehman. Actually, the name changed, but my charts still show Lehman. But it's the 1 2 3, the short term, and they're coming up just a little bit. This is the 7 to 10 Treasury bonds, and they're coming up just a little bit. This is the 20 plus, and it's coming up just a little bit. Not a uptrend by any means, but it's popping up just a little bit. Let's look at some real estate. Also, topping, coming back down. This is U.S. construction. This is home builders themselves, also sitting around top of support right around the 11 level. And this one is the dynamic building and construction, which is pretty interesting with the 1024 as your support level. Now, I went through quite a few indexes, quite a few sectors, quite a few markets, currencies, commodities, and everything, and they all basically look the same. They all look toppy. I don't, there's no safe sector right now. We had some really bad economic news last week. Unemployment rate is at 9.5%. It's climbing. With the stimulus package, we expected it never to go above 8.4. We are over a percentage point above it. Everybody's looking for growth. Everybody's looking for a safe place to put your money, a safe place to invest in. And the problem is that basically everything is slowing down. Everything is cutting back. That sucks. I mean, I don't like to see that. I mean, if my neighbor's house goes down in value, my house goes down in value. So of course I have to care about their house as well. And it's the same thing with the markets. I don't want to see the economy coming down. I don't want to see the markets coming down. I don't want to see everything coming down. Now, my personal responsibility, of course, is to defend myself, defend my family, provide for my family, and so on. And the way to do it is to hedge yourself and take care of yourself and invest for yourself during an economic downturn. And if these charts are right, and if we're looking at basically everything sliding back down, then your responsibility is to take short positions. Now, there are a few positions that we're going to look at for the short side. I'm not going to tell you which ones because that's reserved for our newsletter members. But we're definitely getting ready to go short across the board, basically. When are we going to go short? Whenever the S&P 500 and other indexes start breaking down. I really want them to break down. I don't want to be the first one to go short. There's a saying, you never go short on a dull market. That's because the short side really needs momentum. The short side really needs conviction. It's a panic type of a trade, and therefore it needs participation. If we are still dull, if the market is just going sideways, it's not a good time to go short or go short heavy. But if the market starts picking up momentum, starts picking up volume, starts picking up interest in it, you hear on the news that the market is coming down and so on, we'll find the entry points, we will join the trend, and then we'll come down with it. Now, this is bar charts, but what I want to show you right now is a line chart, because the line charts are pretty interesting. You can see how we're going sideways right now based on the line chart. But here's an example of a downtrend. You can see how it started with lower tops, and then you can see the zigzag up and down. Now, these are all trading opportunities, all of these. Notice that what we're doing right now is basically the same thing. We have a top, we have a lower top, and another lower top, and if we go below a lower top, penetrate the support, we have a lower top, a lower top, a lower top, we can come down. Now, all of these are going to be shorting opportunities for us, and that's our plan because that's when we're going to pick up the momentum. It is very, very possible we go down to 666. Don't get caught not being in the trend or being long in the trend or anything along those lines. Now, the market's been very manipulated lately, so I'm going to wait for the market to actually flow before I take on a heavy short position, and that's our trading plan. That's our trading plan for the next couple weeks, a couple months, really. Anyway, I hope you join us. I hope you join us in trading this because I think it's very, very important to be prepared for this, and you can actually profit off of this, hedge, offset losses, whatever you want to call it. The bottom line is that you take care of yourself and you profit off of it. Have a great week. Sorry I don't have very good news, but I think that it's important for us to be realistic. Take care.